Hi, everyone. Welcome back to this Boston IBD Meetup meeting. This week's meeting, or this month's meeting, is called the Twitter Follower Chart Talk. We haven't had a meeting at the Boston Meetup in a while, so it's good to get together again with everyone. We kind of have a unique special agenda this week, and we've got a special guest, TA Plots, with us from Twitter, and I'll introduce him more in a little bit. I wanted to just go over a couple of announcements we have for the Boston IBD, some things going on, things you might want to be aware of. The IBD National, Amy Smith and Jonathan Howard, the national meetup is going to be this Saturday, August 19th at 11:30 Eastern start time. I will be one of 7 speakers speaking at the meeting. They've given us each about 20 minutes. My time slot is going to be approximately 1:20 to 1:40. And I'm going to be talking about lessons I learned from Kevin Marder. So if you have any interest in that or all the other great speakers, go to investors.com and you can sign up for the meetup. Also, the San Francisco meetup is having their 2-day event in September 1st and 2nd. It's a virtual meeting. I will be speaking at that event as well in person in San Francisco, and I'll be speaking about earning gap ups and some strategies and insights from some research we did in the last year. And probably the most important thing to me is the Blue Sky 6 investing event. This is the all-day Saturday event that we do virtually. This is our 6th year of doing the Blue Sky event. Started out really small, and it's been growing bigger and bigger every year. We're pretty excited about it. So save the date right now. Saturday, November 4th will be the date. We have some tremendous speakers that we're just finalizing. And in the next couple of weeks, I'll be announcing the speakers and the topics. And it's a great lineup. We get some really interesting people to share some interesting topics that haven't really been covered before or seen before. So it's something to keep on your calendar for November 4th. The Boston Meetup has an archived area of slides and past videos. And in the past, we've given out a bit.ly link. We understand there's been a little bit of problem with the bit.ly link with warnings about potentially harmful files. We're not sure exactly what all that's about. Chuck is the person at the Boston Meetup that helps us with managing that site. He's looking into it and looking at some options. I think in the interim, we noticed that if we didn't use the short bit.ly link and we actually typed out the long link, the Google link, it goes into the site fine. So, I'm not sure what the issue is, but maybe we can get this link posted up in the chat or take a picture of it on your screen. So, next, so tonight we're going to do a couple little things. I'm going to give a very brief executive summary of market overview. For those of you that don't know, I have a YouTube channel at Rain King LLC, and I do a general market update almost every Friday. And so I try to keep them kind of tidy and short. They're usually between 15 and 20 minutes. And if you put the video on double speed, you can really condense it down to 10, 12 minutes. So I'm going to take some excerpts from last Friday's meeting and a chart that's update from today, share a little bit about what's going on in the market. And then we're going to get to really the feature attraction, which is what we're all here for, as we're going to call it follower chart talk for Twitter followers. And I'll introduce, we have a very special guest, TA Plot, who's a really experienced growth stock trader. He's very popular on Twitter. He's probably known well for his very clean charts. He's a very experienced chart reader, and he's very generous with his time tonight to share his expertise and his time. So I'm looking really forward to this. We got a lot of people that submitted trades, so I want to thank people for submitting all those trades, showing entries and exits and some commentary. And so we're gonna take them in the order received, and we're going to try and go through as many as we possibly can. Some might be fairly quick. Other ones we might take more time because we think there's a lot of learning lessons. and we want to spend some time to make sure the concepts get across. So lots to share, and we're glad everybody's joining us. So let's launch into this really brief executive summary update. Again, some slides from August 11th and a couple from today. So the pullback that we've been talking about for weeks has been in motion for a few weeks. And this is the NASDAQ as of last week. Can you please mute yourself?
What?
Thank you. So the pullback, we're a couple of weeks into the pullback, and coming out of a bear market, I had a couple of kind of precedents to be aware of. Interesting enough, 2009, we ran up to about week 12, and then we had a 4-week pullback of 8%. 2003, we had roughly right around week 12. We had a 7.6% pullback in 4 weeks. Who knows if this will play out that way, but it's something just to keep in the back of our minds. This is the NASDAQ composite. I just cut this chart, I don't know, an hour ago at the close. So, the QQQs have been the leading index, and the leading index has been really backing down quite a bit. And that's not good for growth stocks when the Q, which was the leader, is breaking down. And so let's just quickly review what we were seeing as this was happening. First of all, we started to see clusters of distribution days. I believe there's 7 on the NASDAQ. Next thing that was really a flag was when we fell below the 20-day for at least 3 days. When you're 3 days below the 20, that really tells me that the short-term trend is down. We've also been noticing new lows have been expanding for the past 2 weeks. This is not good to see. In particular, coming off our first rally in a potentially a bull market, you usually don't see new lows picking up like this. So that's not a great sign. It could stabilize and correct itself. But again, these 3 things are telling us that the odds are slowly not in our favor. And we also have noticed in the past couple of weeks that our leadership is breaking down. We've had a number of stocks that have really gotten hit hard, SMCI, PNW, and some of the younger names, Double Verify, Hubs, Palantir, they've also been under pressure. So when again, 1, 2, 3, 4 things are telling us that the environment is changing and not in a great way. Now that said, there are leaders that are still holding the 50-day or the 65-day exponential, NVIDIA, Tesla, some others. So there are some pieces of the puzzle that are holding in place, but it's kind of a small list. Now, the pullback so far has come down below the 50, just above the 65-day. It's about a 6% pullback so far. Now, I've drawn a line at about 8%. An 8% pullback, ironically, would take us right down to this kind of swing low that we had in late June. If this pullback gets down into the 8 to 12% range, I would really call it, rather than a pullback, I would call it a correction. And a correction would mean to me that you would need a follow-through day in order for the uptrend to continue. A pullback of 3 to 5%, you don't need a follow-through day. Things can just play out, come back down, get support, and move higher. But a correction of this depth, we probably really want to see a follow-through day. So what do we do right now? We're trying to watch for the next rally attempt. We want to see, is the next rally attempt going to be strong? And we should be looking at the advanced decline line. We want to look at new highs, new lows. We want to see what the volume is doing. It's been very, very slow the past few days. And we want to watch some of these leading stocks. And we want to see if they're going to bounce hard like tennis balls and bounce right back up, or they're going to be just like eggs that hit the floor and go splat and really don't bounce at all. So we want to watch that carefully. Now, today was a particularly bad day on the S&P. It was a 90% down day on the S&P, which actually was one of the broadest decline days since April. And the New York Stock Exchange actually also hit new lows today. So it's all not a great picture right now. And we know that August and September tend to be weak months. So this is new highs, new lows. I won't spend too much time on this, but again, expanding new lows is not what we want to see, particularly multiple days in a row. This bull market was starting to look pretty good here. We got up to about 125 or so new highs, but I wanted to point out this is nowhere near what you want to see in I'll say a raging bull market. Usually a raging bull market will have new highs 300, 400, 500 in a day. So while this was the best we've seen in a long time, it's certainly not very robust. Now, I did put up a Twitter poll late last week, and I said, when these leaders get hit, it really tests how much conviction you really have in a stock story and any precedent comparisons you may be making. And what do you think? And I gave 4 choices, and the dominant choice was, the question was really about, do you maintain conviction, or if your sell rules trigger, you sell the stock? So 87% said they would sell rules rule, which is great. There were almost 10%, 9% that said conviction would overrule your sell rules. But this is really an academic exercise. It's fairly easy to get a classroom test right, a book test, but it's a lot harder when you're in the battlefield with guns slinging at you as you're trying to trade stocks. And that's because your emotions get involved. So be aware, try to honor all your stops and your sell rules. There's times when you just need to protect yourself. So just to kind of summarize, the pullback's continuing, lots of swirling bad news, the debt downgrades, bond yields rising, that all puts pressure on growth stocks as an alternative. I mentioned, keep an eye on NVIDIA, that's the leader of the market. It had a strong bounce yesterday, but today it actually ran into resistance at its 20-day. The Fed watch, I think, is interesting. I was checking actually today, there's only a 10% chance right now at the CME forecasting a 1/4 point hike in September. That's really, really one-sided. Jackson Hole meetings are coming up, and if we get a hawkish Jackson Hole commentary, that could prelude and shock the markets a little bit, and maybe we do get a hike in September, or at least the odds change significantly. So we'll have to see what happens at Jackson Hole. Earnings reaction are very mixed to poor. Still a lot of risk uncertainty, particularly in these growth stocks. You really need a lot of cushion to hold through earnings. And generally, keep your powder dry on any new buys right now. It only wants to be the strongest setups. I always recommend stock the leading stocks. Don't go for tier 2 and tier 3 stocks. Try to get into the leaders maybe that you missed if they're pulling into some strong support and show tennis ball action. If you've been hit on a gap down or you're taking a bad loss, it's best to really sit out. You want to regroup mentally and don't go back in and start revenge trading, because that can just escalate and lead to more losses. So exposure levels should be dialed back down a bit. We want to really listen to the market feedback. As I mentioned, we just went through the dial on the NASDAQ. Everything is really, really not pointing up right now. So exposure levels should definitely be reduced, only holding the best that you have with a cushion. Okay, so that's a little executive summary on the markets. Now I want to get into the main event. So I wanted to welcome TA Plotz with us, and again, very experienced growth stock trader, a really, really disciplined trader, and an excellent chart reader. So I'm going to let you have the screen, correct?
All right, sounds good.
Okay, let me.
Thanks, John.
Let me do this here.
Happy to be here, obviously, and love your weekend take on the market as well when you do them. There's not a lot of videos that I watch when they're posted, but yours is one, and I kind of just let you do the market analysis, and I just focus on stocks. I think that works pretty good. All right, let me share my screen. Screen 1. Let me know when you guys can see. You should be able to see trading view. Good?
Nothing yet.
Not yet.
Oh,
All right.
Here it comes. Ah, there it is. Okay, got it.
All right. So you're seeing WFRD.
We do.
Okay, perfect. I'm gonna set the other stuff up here on my second screen. So you're here, you know the drill, you know what we're gonna be doing. We have quite a few trade submissions that were put through, and really appreciate it. I did make a list of them here, so we have them here. There's plenty that are submitted twice. People trade in the same ticker. Makes sense. So we're gonna go through them. It's not about quantity, but it's about quality. So we might not go through the entire list. We're gonna be deviating away from these submissions and potentially show what a good example looks like. There's quite a few of these submissions that came in as, hey, I'm buying a pullback buy here. So we'll touch on that, and then we potentially show some recent pullback buys that I've spotted, I've done, and try to kind of help you see what a good pullback buy looks like versus ones that have been submitted. So we're gonna just kind of deep dive into each of those and not necessarily go through the entire list, but we have the list. John, do I still have you?
Yes, I'm still here. I just turned my video off.
All right, just making sure. Okay.
I don't want to blow the screen.
Yeah, so we're gonna do this the way I approach trading and how do I approach my picks every day. Weekly is where I start. If it looks good on the weekly, I'll look at the daily, and we're hone in on risk management, volume pattern, RS, and things like that. So we'll start with WFRD. I've already marked the entry and the exit. Yeah.
Yeah, could you just explain to the audience, that people that might not know that, explain if you trade part-time, full-time, how long you've been doing this, just to get some background.
Yeah, I have been trading part-time since 2006. I have an IT career that I built. I've been in IT since 2004 and trading since 2006. So I do this part-time, but it's really not part-time. It's a passion of mine. I dedicate every minute to it. I notice in chat, we have people from India, and it's 4:30 in the morning in India, right? That's the dedication, that's the passion. That's what you need to really be able to get this. It took me a while. I done all of it really, and my charts were not simple like this. My charts were just like anybody else who started with this and played with tons and tons and tons of indicators to a point where you can't see the price and you can't see volume. And then from there, I start shedding all these indicators and just leaving the ones that really help me visually quickly see what I'm looking for from a volume and price perspective. Moving averages, unbalanced volume, we'll talk about that a little bit, how I use it. That's the bottom indicator here, unbalanced volume. It's a little customized, as coming from a software engineering background. I do a lot of coding, so I've coded all the stuff that you see here. This is the 200 MA. It turns color when it's uptrending, blue uptrending for 1 month, and then when it's cyan, it's uptrending for 5 months and up. You would see there's a lot of flavor of Mark Minervini in here and Bill O'Neill, mainly, really. I use Bill O'Neill's teaching to help me hone in on the best stocks in the market from a fundamental perspective, from relative strength perspective. And then obviously the stage 1, 2, 3, Bill lived in stage 2, and then basis, double bottom, cup with handle, flat base, and then really honing in on low risk entries. So we're going to talk about all of that stuff. This is the RS line up here. I recently did modification to it, and I did post it on my script page on TradingView. Turning red, I watched YouTube video or IBD live from Mark Weber, and he was talking about, I think Webster, his last name is. He's talking about how he likes to look at the RS with respect to its 21 moving average, 21-day moving average. But he looks at the closing price of the low of the instrument versus the closing price. So I coded that in here. So when this is red, it just essentially says the 21 moving average of the RS line is trending down. And that turns red. It's just a quick indication to tell me the stock right here in this section is underperforming the market. Okay. Relative strength, I think everybody on this call knows that. That's a little bit of history about me. I do most of my works on the evening. Most of my buys are buy stop limit, placed either early in the morning when I wake up or the night before. Daily and weekly, no intraday. I have done intraday previously in my past, and I suck big time at it. I've done futures, Forex, really you name it, Fibonacci, Elliott wave, buy-in support, sell-in resistant. It just tried it all. And I ultimately settled on this, and I've been doing this for a while, and it works for me, works for my schedule. So we're gonna start with weekly, and then we'll drill in on the daily. So we're gonna use Market Smith for weekly, and we will use TradingView for daily. This is the first submission, WFRD. Obviously, oil stocks has been strong lately. WRFD came out of this beautiful base. If you read Mark Minervini's books, this is clearly stage 2. And then building the base, and then coming out of the base. I took a screenshot from Mark's book. This is what you need to imprint in your head. There's no VCP when the stock going down. There's no VCP when the stock going sideways. There's a VCP after an uptrend. What you are trying to do is figuring out when momentum is kicking back in. So if you're looking at a chart that's not in stage 2, and you're trying to figure out where the VCP is, there's none. There's no momentum that is going to be picking back up after resting. Run, rest, run. And you're trying to figure out when to get in before the next run starts. Okay, so you'll see a lot of the model stocks, and I have tons of them, have this characteristics. There's the uptrend, and Bill talked about it before the base. You need to look for an uptrend at least 30% before the base forms. WFRD did exactly that. So the weekly chart tells me 2 things. It meets that criteria, and it also tells me that it can run. You want to see that history in a stock, that, hey, this stock can go on long runs, and now it's building a base and potentially going to start again, and this is what it's looking like. So you look at the weekly looks good. You got your run, you got your RS, building the base. It's all quick visual checks that you need to have in your mind. Right? You got crazy EPS, yearly estimates, growth. You have sales, consistent. You have quarterly earnings. It's a go, right? Composite rating 99, relative strength. So weekly looks great. Now you go to the daily to find your entry. Here's your daily. Here's the person that submitted the trade bought this here. This looks great. Same stuff. Here's your uptrend, and here's your base building, right? You've got 1 down here, 2, 3, and then potentially another 4 here. This was tricky. I've been watching WFRD for a while, and I really couldn't find a place to get in. And now you'll start seeing what do I wait for to be able to get into a stock. Even though it did the contractions and it had this base building and volatility contraction, it was still a little bit just wide. It didn't really tighten up the way I'd like them to. It was hard to trade this. I missed it. I never really took any shots at this. You can place these after the fact. It's obviously more obvious after the fact. Even if you waited, this when it went up here, this is a good time to talk about a little bit wedging up. This goes up like that. You don't want to buy that. This is more wedging into that supply line. And I often say it on Twitter, wedge is often correct. And that's what it did here. It wasn't a big correction, but it did. Similarly here, if you see, this was wedging back to previous high. And like I say, wedge is often correct. It did the correction. And that's healthy. When you see that, that's healthy. That wedge has been corrected now. Again, corrected. I would have potentially bought it here, but I would be lying if I wasn't stopped out, depending on where you stop. This is a big wide range that looked pretty horrible during the day, right? I mean, this looked pretty black all the way down here. It opened here. If you're somebody who watches stocks during the day and you adjust your plan, this candle looked very bad during the day. it looked a lot worse than this candle. It probably looked like this candle. Recovered at the end of the day, and then this person bought it here. I don't know the entry. I'm assuming he bought it over the high. If I did, I would buy it over this doji long hammer candle. But it was still a little bit volatile to me, and I didn't buy it. You would need a 6% stop. That's obviously still less than the 8% max, but it's still a little bit wide. So I would have definitely missed this trade. It's a good trade. Not sure if this person's still holding the stock, but it's a good trade. I don't know. I don't think I really have anything else to say about this trade. It has the base, has the uptrend. It's just never set up to my liking to play it, but it's a good trade. All right.
Okay.
Let's move on to VRRM. This was bought here. And what I'm going to do, actually, there's a neat trick with TradingView. Allows you to go back in history and really look at the stock, how it was looking before it broke out. I do that often because stocks look very different after they break out from before. And all of my stock models that I have in the books that I created, they all have charts like this in them before the move happened, and then a chart after the move happened. So let's go to the weekly and take a look at this before we drill to the daily. Yep.
There was a question. I'm sorry to interrupt you, but there was a question I think would be good to answer. The question was, can you explain a little more detail around what you mean by, wedging into the supply line?
Yeah, sure. Let's go back, and I think we're going to see a lot of these. So Bill talked in his book about coupled handle and how he wants to see the handle pulling back and going down versus slightly up or sideways. Sideways is okay. Going down is even better. What that does, it really shakes weak hands and puts that last contraction before you move into new high ground. This is not how you want that move to be when you're trying to go to new high ground. That's why you normally, when you have a cup, you then have the handle, and the handle wedges down, right? So let's try to draw this cup and handle. That's going down. If you have a cup and you have the handle going like this, it's wedging up. And that's not an optimal setup that you want. Okay, you want to see sideways tight or potentially better down on that handle. So you don't necessarily have you could potentially say this is forming a cup, right? But the angle of attack to this previous supply here and here, these buyers are waiting to sell. And when you go up like that, there's really no shakeouts in the pattern. And then you have to come back in. You did it here as well, right? So here's your up. And this is even right here, this is wedging up, right? You're regaining this selling in a wedging up manner. And then you correct. You wedge up again, you correct, right? And then you try again, wedge up, you correct. And this is just the rinsing cycle, right? Of, bottom fishers that bought here are taking profits. There's not enough cycles to absorb the selling that happened here. And this is why a lot of times when I talk about the setup is way too close to the selling. So let me just delete this stuff here. That's the thing, right? When we start talking about one chart, we can spend a whole hour talking about it. This potentially, right? You could have some people could have played this here, right? So if I just go into replay mode and just say, okay, can we play this here, right? So this looks like it's setting up, but if you look at chart long enough, you'll know that this is not enough time to absorb the sell-in here.
Yeah, I think
You know, this is
that's really important. I think, see, let's look at the left side there. Those big fast bars down in that cup, you know, those are what I guess you'd call trapped buyers. The stock fell so fast that there's a lot of people that didn't sell. So they get stuck with the stock, and the stock, you know, makes a little bottom at the bottom of the cup, but all those people have losses. So when it starts to come back up off the bottom, you know, it's only been, I don't know, 3 weeks, and they've got losses. So as it comes back up, they become sellers that want to get out at break even. So that creates supply. As soon as that stock comes back up, you can see it came about halfway up that cup, and look at that big black bar. People came back in and said, I want to get out of this. I got stuck in this when it went down so fast. So when you see that sharp decline, you get a lot of trapped people in the stock, and it takes time to work all that off.
Yeah, there's not enough cycles, and this is why I keep saying, you know, really waiting to know what you want to see is extremely important. And it took me a long time. You know, it's very easy after the fact. You know, everybody can look at it and say, oh, I should have bought it here. I should have bought it here, right? Should you buy it here? That's what you know at this time, right? You don't know anything after that. You have no idea. Only thing that you know is all that stuff that's in your head and the charts that you've looked at, thousands and thousands and thousands of them. Does this look like a model stock in your head? And if you don't have that, you need to figure out how to get that, right? You need to know what you want to see before the chart unfolds. And what happens when you get to that point, when the charts start unfolding, you know that it's going in the right direction. This is not something I would play. This is wedging up like that, right? That's going up. That's I mean, can it go? Yes, you're playing probabilities. Can it just break out here and go? Yes, but obviously that's not what happened. There's a lot of selling here. You need more time for that selling to die, for Mark says it often, for supply to stop coming to market, right? There's still a lot of supply that come into market. I know we're deviating, and this is the idea behind this, right? 0101, I posted about this multiple times. Did I know that it's going to gap down on earning? No. Could this have been a gap in the other direction? Yes. But the probability when I see a trade like this, I don't want to play it, right? This here, there was big sellers here. This is not John, not me. That's institutions selling, right? Institutions more often than not know something, right? People, in institutions didn't like this report here. They sold it, right? So folks that sold here, if you know how to read charts, you can get to a point and realize, okay, there was somebody here selling. And if you notice this candle right here, right? This is a big ugly candle on good volume. This is probably the same institution coming back and unloading more shares. And then this is finally what happened, right? So, and this is wedging up the entire way. And I've posted on my Twitter feed clip by Bill O'Neill talking about Apple when it set up similar faulty base. But obviously that was later stage. But you guys, you're gonna start seeing this stuff often. So let's go back and just yeah, I mean that's wedging it's up. It's going up. When I see a pattern that's opposite of wedging, I'll point it out. Okay. VRRM, this is how the stock looked like. So let's go back to replay mode and cut it over here. And let's go to the weekly chart and then pull up VRRM. VRRM. All right. I think this was bought here. This is not a trade I would do. Let's just hide this because we really don't care about institutions right now. Oops. Where did we go? All right, let me get back to where I need to get back. There is a zoom in button here that's not showing up today for some reason.
You see
But
that?
that's okay.
1 second.
Oh, here we go.
All
right. So first and foremost, there's just not enough here. Okay, it's stagnant. It's just no growth, right? Remember what Bill was saying. It's not the chart pattern that causes appreciation. It's earnings. So I have no reason looking at this to say this is gonna go, 1, 2, 3 folds, 20, 30, 50%. The earners are not behind it. Can that change? Yes. But there's 9,000 stocks in the market. Why would I want to be trading something that takes away from the probability versus giving me advantage and giving me an edge? Sales down to single digits, potentially just really earnings are just up and down, no consistency. And really, even if you're just looking at price action, this is just flat. Remember, you're buying it here. You're banking on this is breaking out of this long flat and then starting an up move. Fine, there's no wrong with that. You can do that, right? But you need to figure out what kind of trader are you? Are you trying to trade stocks in momentum and catching them right when they're starting their next move up? Or are you trying to trade stocks that have been dormant for a year or two, and now you want to catch them coming and starting a stage 2? Because there's a lot of traders that do that, right? So if that's what you want to do, this is a fine trade. Nothing wrong with that, right? But you look at RS, just flat. You look at the green one is the relative strength against the group. That's also flat, right? So this is not something I would trade. It doesn't matter if it's set up on the daily. And honestly, it did catch my attention when I was screening for stuff. I think you see there are things here that I was looking at, but it just was way too choppy. And then it finally made a move, but it's going to be extremely hard. If you play this stock 100 times, I don't know. It's just not my style, right? There's, again, go back and look at this chart here. At this, there is no uptrend. So regardless what kind of base is setting up here, there's no uptrend. The base is not valid, right? I know that Marcus Smith still show the base, but there's no uptrend. Cup with handle is valid after an uptrend. Cup with handle on a downtrend is not a cup with handle. Right? So for me, I pass on this. I would not trade it. Technically, this was okay. This was set up on the daily. You can see there's an uptrend, but you zoom out to the weekly, there's no uptrend, right? It was trying to break down, and then now there's a thrust, there's a momentum, there's an uptrend, potentially a change of character here, right? With highest volume, highest up volume in a year, probably maybe ever, on earning. So like I said, you have reasons to play it. And then you've got your first contraction after really an uptrend and a really, really favorable earning report. You break resistance, you pull back, you're really still building this. Here's a good example, right? Of cup and a little handle, and handle is drifting down. So now you start seeing the difference, right? Between wedging up and drifting down. This is healthy. You could potentially bought it here. Whoever traded this, you potentially bought it here, right? Coming out of this pivot, nothing wrong with that. This is okay too. Play in trend lines is not my favorite setup. I think trend lines, you can redefine them often and then fail a lot more than horizontal pivots. I love horizontal pivots, inside days, stuff like that. So this was a good trade, but not something I would play just because of the weekly. So now if you just kind of cancel this out and see what it did, good move up, held the 21 all the way. Good trade.
I think what's really useful in this description of the chart, when you know, this speaks to your time frame, because when you look at the weekly chart, you know, you got this big long consolidation, very sloppy and all over the place. And, you know, eventually it has a little flat base at the end within the big consolidation. And, you know, there is no prior uptrend before that consolidation for, I don't know, a year and a half. So, you know, if you're a position trader, you know, this is not a great launching pad, I'll say. But when you zoom in and you say, let's look at that little flat base, because maybe you're a swing trader or maybe a day trader, there's a trade there, but it depends on your time frame and what you're looking for.
Yep. Yeah, and like I said, I mean, back in my old days, I trade. There's a lot of traders that trade this. It's just like I said, you figure out what you want to be. You can't trade all setups. You can't. You will be all over the place. You'll be chasing your tail. You can't focus, and you can't figure out what do you really want. What do you want to see? Because if you have 4, 5, 6, 7, 10 different things that you want to do, it's hard to have all of that in your mind. It's hard to really have a style that you know what to do with and how to react to. Okay.
There's a
Let's go to
question in the chat for you, TA, that people wanted to know on your weekends and your screening. Are you primarily looking at weekly charts, or are you starting with daily charts, or how do you build your list?
I have my custom screens that I've made a while back, and I've used them all the time. The combinations of RS, earning, sales, volume, criteria, stuff like that. When I combine all of these in one watch list, there's about, depends really on the market, 400 to 600 names is ultimately what get dumped into my my kind of, I call it focus. It's not really focus, but that's what I call it. It's focus list, 600 names. And then I go through these over the weekend. I have the daily and the weekly refreshing when I'm flipping through the charts, and I'm seeing both the daily and the weekly at the same time. I'm mainly on the weekend looking for stocks that are not extended from that 600 list, that have the good, potentially good chart on the weekly, potentially are in a base, maybe pulling back to the base after a breakout. And then from that 600, I ultimately end up with about 70 to 80 names that make it to my kind of daily routine, because I can't go through 600 charts every night. I want to focus a little bit more. So then I end up with a list of, depending on the market, sometimes that list is 100, sometimes it's 50. Right now, I think it's about 54 names. And those are the names that I go through every evening. I just scroll through them very quickly. Sometimes I jump into IBD 50 and I take a look at that quickly. And then, you know, every now and then I look at the Market Smith, what is it, Growth 350 it's called? Or 250, Growth 250.
Yep.
They have those kind of targeted ones where it says, you know, breaking out today, or recent breakouts, or near pivot. Those are just kind of really targeted selections out of the 350. Kind of skim through those on my phone sometimes. That's really the process. The heavy lifting is over the weekend, and then daily, depending on my time, I just kind of sneak some other lists here and there that are pre-made out of Market Smith. Okay, in addition to my list, but always weekly and daily. Always, I'm looking at both. Has to look good on both. All right. So let's so we're done from this. Let's go to DKNG. Obviously, big name on Twitter, stuff like that. I started looking at it first time here. The trades that were submitted, there was one trade made here, one trade. This is the exit, and then somebody else made this trade, and exited here. There's a comment on this trade. The person that submitted it says, I feel like I exit too early and need to work on sell rules. I would like to hold positions for a few weeks to capture the strong move. It makes sense looking at this, right? And we're gonna go through this here in details. Let's take a look at the weekly just to stay in that habit. DKNJ looked okay. DKNG. I'm assuming that was around here. It's a new IPO. So when they're new IPOs, I give them a little bit of room, okay? This is a huge drop, ugly. I don't think Mark would touch this. Very early heading into stage 2. And there was a theme in the market this year when the bull market started to go. A lot of these growth stocks were looking like they're finishing stage 1 and heading into stage 2. Okay, this is stage 4, stage 1, potentially going into stage 2. Beautiful sale numbers, right? Not profitable yet, but potentially becoming profitable very soon. Big momentum. I think the stock here had, north of 95, 96 on the RS line, both its group and to the industry, green and blue, and the 200 MA is turning up. It's an IPO. You really don't want to trade stocks this deep, but you got the sales, you got the potential momentum. Another big item is it's really liquid, very liquid. Big deep bases on liquid stocks that are really not supported by institutions. Don't touch them. Doesn't matter if they're IPO or not. This potentially had a big character change on earning. Huge gap. Pulled back, filled it. First touch of its 50. 200 MA turning blue, which means uptrending for a month. Okay. First time I was looking at it's right here. This is an okay pullback buy right here. Inside day. I say inside day a lot, but if you scan for inside days in the market, you'll get thousands of stocks that had inside day. So I don't scan for inside day. I find the stocks that I would like to find an entry in. And if those stocks put an inside day, depending on where that inside day is, I'm interested. Inside day for me is a pivot of itself. If it's in a place where I have seen it before thousands of times, that works. So that takes experience, because I see a lot of people just go and scan for inside days, right? That's not how I do it. So when I was watching this pulling back, you've got your uptrend, got your pullback, and then I'm looking for a resumption of the trend. Okay, and I want to buy it here, turning back up. Okay, and this is what this was doing, and this almost bought it here, but I didn't. I don't remember what was going on, but it was very early still. A little choppy here on the 50. So I did not, and I've never traded this. I did not buy it. I didn't like how it was going back here. For me, I wanted a little bit, one more correction here. So like if this pulled in 1 or 2 days down here and then turned back up, I would probably bought it. I didn't like this. And this is the thing about, being picky, right? And waiting. It's like you're gonna miss a lot of these. Tons of them, and that's okay. But it's hard to do, right? It's hard to sit and see you waiting for something that you want to see and doesn't happen, and then you miss this one, you miss that one. But I do a lot of trades, so there's a lot of them that does set up the way that you want. So this really did not just give me that this last check in before it took off. So I didn't trade it. So this entry here, the person that submitted this says you sell too soon. Here's the thing about selling here. I think you got to ask yourself, why are you selling here? Like, here's your high, right? Here's your previous high. When you take a trade, right? What was your plan? You did okay buy in here. Not a horrible buy. It's fine. It's okay. But what was your plan? Like, what was your plan to sell for 2%? I mean, I don't know what is that. Well, that's 4%. But I mean, you're risking. I mean, if you're going to put it here, you're risking 5, 6. So it's not even 1-to-1. Like, if you didn't sell here at the previous high, why are you selling here? I'm pretty sure that was not the plan, right? This was just, okay, this is just bad day. I'm getting out, right? I don't want to take a loss, okay? But if you do that for a lot of your trades, you're not even a 1-to-1 trader. Just move it to break even. Just protect your line. Move it to break even, right? What was your plan, right? For me, if I took this trade, I would probably sell something at the old high. That's the plan. I know I want to sell something at the old high. And if my plan was not to sell something at the old high and it stopped pulling back, I would just put stop break even. A good example is, what did I trade? IoT. Right? I bought this stock here. I still have my marks. Right here. Inside day, pullback buy potentially, a little bit aggressive, bought it over the high. I didn't sell anything here. I mean, my plan was to sell something when it hits the old high, just unload 30% of it, 25% of it. But when I had those big 2 days, I moved my stop to break even, just a little bit under break even actually. Well, I stepped out at the open. So that was up 8%. My stop was below the low of the inside day, was 5%, a little bit over 1. But too early to take profits. Here, and then taking profit up here a little bit, that's 17%. That was my plan. I wanted to sell something, not all of it. Comes back, takes me break even. I'm not looking for 2%, right? And 3%. It's just not going to pay. And you know, definitely this sale was just a panic sale. I don't know where that tick went. Just afraid that this is, going to take the money away from you, and you've decided to take the 4% and just call it good. Here's the thing about this, right? This is wedging up the previous high. What did I just say a few minutes ago? Wedge is often correct. And if you look at this,
I think that's a really good point. It's a really good point, man. Bill talks about it as, straight off the bottom. And, he always, when you come off the bottom like that and you're trying to blast into new high ground, it's just the stock needs to rest. It's going to correct and form some sort of handle. And so you can see this little stop out, this was, could be a little handle to that base.
Exactly. That's where I was going. This is, if you just zoom out a little bit, see a couplet handle. So the person that sold it here was part of the shakeout. And that's why these patterns, when you give them time to do what they're supposed to do, they strengthen. So this person sold really at a pullback to support. And that's why you just need to figure out what is your plan. Sell a little bit over previous high and hold through the next pullback. Can it go all the way down to stop you out? Yes, it can. So that's how I would have handled this to help you hold for longer, sell some at previous highs, stop the break even, and let it stop you out. This one here is also no one traded this one here. I almost bought it here. I bought something else that day. I almost bought it here. This is an okay pullback buy, new high pulling back, and it's really still pulling back to the previous base. And you can pick it off of the 21 EMA. I don't buy them falling down to the 20 EMA like you've noticed. I need them to pause a little bit. Low volume, almost inside day on the 21 EMA. I am gonna risk, 2% to know if I'm wrong, if I'm right or wrong. 2%. That's what I want to do. I'm risking 2% to know if I'm right. This one here, I wouldn't buy this one here. The person bought it here, sold it here. Again, what's the plan? This is not really enough here. And then you have your 10-week MA below you, your 50 MA below you. It's volume drying up. This is just too tight. And then I think the question is, the reason why I didn't buy it here, the reason why I didn't buy it here, or I didn't buy it here. For me, I ask myself a question every time I look at a chart, right? I missed it here. I missed the handle pullback. I missed it here. I missed it here. Why do I want to buy it here? I've already had 4 chances to buy this stock. I just let it go. And DKNG was on my list. That every day I looked at it. But I hesitated here. I didn't see this. I didn't buy this. I didn't buy this. So I'm done. I take this as a learning opportunity.
There's a good opportunity here to go back to the question in the chat. So go back to the base that we were looking at, the little cup, the original cup with handle, the original one, back to the left. Yeah. So, somebody said, well, are you saying, buying on the right side of a base is not advisable? And that's not what we're saying. Because if you think about it, that buy little green dash in that base, you say, that's a pretty good buy because you avoided the crowd that's going to be buying the breakout.
Yep.
And so you're positioned pretty well here. And when the stock breaks out and it kind of pulls back in, you're not under tremendous pressure yet, because you bought in the base. If you can find a really clear pivot in the base that really has wound up a little bit and the volume's drying up. We're not saying don't buy the right side of a base. It has to just be proper.
Yeah, no, this was a good buy. I didn't buy it, and here's what I was looking for. This is a really good buy. This is your volume breakout on earning, and then you're really pulling back, consolidating around the 50 MA, and you're turning up on really low volume and no distribution. You've got a couple days here, distribution right after the earning gap up. That's what the red stuff is. It just tells me high selling, closing at the bottom third of the candle. Those are distribution for me. That's why I count them red. I need to see some distance away from distribution bars when the setup happens. I have that, right? No selling happening while the consolidation is taking place. Positive. Up down ratio is 1.3. Positive. OBV is trending up and holding, positive. RS against the market is blue, positive, right? So all of these check marks, you have to have something on your charts to get you to check, right? This right here, the circles over here, volatility contraction, right? TTM squeeze. A lot of people know TTM squeeze. This is just telling me Bollinger Bands are going inside of Kettler channels, custom indicator that I put. So we're having a squeeze here. I'll talk about the other ones later when we have time. So this was a good trade. What I was looking for is, this is the first drop. This is the second. I was looking for one more. Okay, I needed that one more check-in to shake out a few more traders and then move out. Didn't happen. I missed it, right? So going back to this only have 2, obviously, but more often than not, you have the 3, 4. But that's what I was looking for. I was looking just one more check-in. I didn't like the way it's doing that. I wanted to check one more time and give me that third contraction and then buy it. And that didn't happen. I should have bought it. I should have really notice this, and I never did. So I missed the trade, right? Lots on this trade. Any more questions before we move to another one?
Now, let's move on.
All right, let's do COTY is the second trade, or number, I don't know, number 4 or 5. CTOY, nasty, right? Coming out, again, this is good just technically. We'll go to Marcus Smith, take a quick look. Uptrend, just like the picture. They'll start the base building, right? And you always see, more often than not, on the right side, on the left side of the base, you always see red bars, right? That's really what creates that that left side, the selling. Without the selling, there's no left side, right? Stocks will just continue to go up. So you'll see that red here, and then you want to see that red rise, and then you want to start seeing green and blue. And that's why I wrote these indicators. This is also free on TradingView. It really visually helped me see, do we have distribution or accumulation? Right? This looks really good. Red away in the base, and then you have extreme dry up in volume here. You have pocket pivots, and then really small range candle, big shakeout here, which kind of, yeah, it's hard to manage risk here, but you can put your stop down here below this range. I mean, great buy, moves out very quickly and comes back in, right, and gets stopped down. I think he moved it to 2%. I think he said in his remarks. If we look at the weekly on this one, COTY, right here. Let's zoom in here a little bit. Double bottom, according to Market Smith. We got a big base here, run up, and then trying to break out. The issue with this, and this won't make my list. One $11 stock. I normally stay away from them. I think most of my filters are 12, 13, 15 and above. But really, there's really nothing.
Yeah, I mean, I think when you look at the fundamentals here, I mean, look at the sales. It's like there's nothing there. And you got earnings that are like negative quarters, positive quarters. The forecast for 2024 is minus 11%. I mean, it's just not attractive. It's an $11 stock. It's people get attracted by stocks that sell between $5 and $15 because they think, oh, this thing's going to double really easy. It's actually the opposite. There's a lot of risk in these stocks under $10 and $12, particularly in a stock that has a an erratic earnings and sales history.
Yeah, like you really want to try to put all of the probabilities, as much probability as you can, in your favor. And what's going to drive the stock price? I mean, why would the stock go to 20 if there's no growth in its future, right? Why would the stock double? So, I mean, if you're playing it for 5%, you don't need fundamentals. Stocks move 5 and 8 and 10% all the time, and you don't need fundamentals. But I'm trying to get into stocks that I can, maybe unload a little bit and then just hold the rest for a little longer. But it's all about probability. Like, I want the fundamentals, I want the momentum, I want the volume, I want the accumulation, I want it all. Why not? Right? No one, this is the beauty about trading. No one is forcing you to buy anything.
I mean, this is another great example of compare it to ELF. Look at ELF.
Right. Look at ELF.
You're better off. You're better off, even if you miss the ELF breakout and you miss the first 6 months of this run, and you say, I don't know, beginning of the year in January, where it gapped out of this little consolidation. You say you're better off finding a way into that stock at a proper entry, even though look at how smooth the bars are. Look at the sales, the earnings, the forecast. It's just like a totally different picture.
Big difference, right? I mean, huge difference in what we were looking at and what we're looking at here. And why do you think ELF is doing this? Not because of the cup hand, not because of the cup base, It's really not. It's because of this. Because there's institutions that want the stock because it's has a lot of growth. They're selling their product left and right, whatever that product is. I don't know what Alpha has, but must have something good. People are buying. And that's what drives stock. So if you have 1% sale growth, what's going to drive your stock to go 20, 30, 50, 60%? So technically, it's an okay setup. Failed. There's just half of these setups are going to fail. It's all about risk management. But fundamentally, this stock was not on my list. BBIO, this is a good one. I've been watching this. You see my lines here, but this is the trade that was made. It's an aggressive pullback buy on a power play. So people who don't know what power play is, it's really just moving, 100+% in 2 months. Is it? Or 8? Is it 2 months, 2 or 3 months? I can't remember exactly.
6 to 8 weeks.
6 to 8 weeks. So this moved up 160, and you should not pull back more than 20 to 25 if it's a low price stock. So this was kind of pulling back here when it was bought 11%. So obviously very strong. This is early, very early in a power play. You would need 2 weeks minimum. That would give you 9 to 10 days. You probably want to have it just consolidate for 3 weeks. This is 1, 2, 3, 4, 5. But I see what that person was doing. It's really a kind of a really small candle range, risking 4% on a power play that could go 30, 40, 50 from here, 50%. Obviously not a lot of stuff is working right now for the last 2 to 3 weeks. But if you want to try to, bottom catch something, I think this was a smart play on a power play because they're strong. They kind of do their own thing in the market. But obviously this is kind of stalling here. I was waiting for it to do something here on this pivot. That's why I have this on here. So it was on my list. But it's still pulling back. So now you have that 3 weeks, right? So now this setup gotten better, right? You see the volume dry up here, hardly any volume coming to the market. No red bars, no distribution. So this is still a high probability. Now it's pulling back to the 21 EMA. I don't buy them touching moving averages. They need to show me something. This has not set up yet. The blue, so now you see the volatility squeeze, right? So now it's spent enough time to start showing the volatility squeeze. And then the blue color is just telling me just it's contracting. Just another custom indicator that I have. So this is still playable. People can put this on their watch list. If you don't know power plays, but we're going to read a little bit more about Mark Minervini and then High Tide Flag. Essentially, it's Bill stake on power play. Okay.
Here's a question related to this stock of the chat. Question is, how does industry sector play in choosing BBIO stock, given that the XBI ETF is doing poorly? So maybe we could talk a little bit about, biotechs are a unique read. Many biotechs don't have earnings and sales, but sometimes you say you're just trading a pattern. But I think they're not for everybody, because there is potentially a lot of risk on just news, passing trials, failing trials. So I think you have to know yourself if you want to take on this type of risk. I mean, just for myself, I don't get involved with biotechs unless they have earnings and sales and they have an actual product, but a lot of people do. So they can play them in different ways, but curious your thoughts on that, TA.
Yes, so you're right, Bill. If you look at Amgen, for example, one of his model stocks that he bought,
Yep.
they had the sales, they had the earnings.
Mhm.
So it didn't matter for Bill. You had to have the earnings and the sale, regardless what industry you were in. Bill would not potentially, if he's still with us, rest in peace. He would not be looking at this. It has no sales, no earnings.
Yeah, that's very true. I mean, even in the late 90s, when every internet company that had a .com after its name, he didn't play those stocks. They had no earnings and sales. They were just, measuring eyeballs to websites at the time.
Yeah.
And many people did well and did things, but Bill said, no, it has to have earnings and
Right.
sales. And
Right.
so, or at least a runway there. That's why he was in AOL. They had real sales, and Qualcomm and Schwab and some of the other big leaders. eBay eventually in 03, but it's a real company with earnings and sales. He was a very disciplined person about earnings and sales because he knows that is really what drives, price appreciation.
Yeah, I would play them, but they really, really have to have extreme strong momentum. And I look for RS. This is 99, right? You can't get any stronger than that. So if I try to swing something that does not have the fundamentals, I know what I'm doing, and it is to take 8, 9, 10, 20, 30% of its bar play. So not to hold it for long term. I have no expectation that this stock is going to double, and I don't care if it does. So if I do that, it has to have strong momentum, 97, 98, 99 RS, and then it has to have an unbelievably good looking chart with momentum and setting up just perfectly with low risk entry, right? So that has to all be, scoring 100 if I am going to play a stock that does not have the fundamentals, and I do, but it really has to.
And I think you mentioned a couple of times about, what's your plan? And, if you're going to take on one of these, you say, look, I don't know, I'm going to risk 2% and I want to make 10%. I want 5 times my risk, and I'm going to sell when I hit my target, and I'm not going to mess around with a potentially volatile stock. There's nothing wrong with doing that if you've got a plan.
There's something powerful going with this, right? Now, is this going to come down and do this? Sure. But the reason why this stock is up 160% and only pulled back 11-15% is because institutions are not selling it, right? So fundamentals are not reflecting the story yet. But you can't say that about stocks that are just flat, moving sideways for a year, and say, just trying to explain that the chart is not showing the fundamentals yet, right? This is obviously institution bought it and not selling it. So I go into those if they set up, and power plays are part of my arsenal, and I do use them. So that's why I've been watching BBIO. So this one was a good setup.
Here's another good question for you is people see you drawing these, horizontal lines and they said, when you're drawing those, are you using intraday highs, upper part of the real bodies, or a majority of the prices? How do you approach where you're placing the line?
I watched a lot of clips by David Ryan, right? And one of his famous lines, he keeps saying, just draw the line, right? Just have the line cover the majority of the price action. That's it. 90-95% of the price action. It doesn't matter. There's no exact science to this. This is all art. This is all observation. This is all trying to read supply and demand and assess to your experience and observation throughout the years when supply is going to dry out and when demand is going to take control, right? So I can draw a line one way, John can draw it a different way. There's obviously, you can't do this, right? And say, here's the resistance, right? So just your best guess. And then, just observe charts. Some people would just want to say, nope, I really wanted to take out this line, right, all the way at the top. I don't really care for the previous high that much. I'll probably care to know if I'm going to sell something. But yeah, just visually, don't complicate it. Trading is really not complicated. We complicate it. I've complicated it for so many years, right? Just look at the chart, clean the chart, and see where the price is, see what the volume is doing, and draw your line, your horizontal line. Okay, hopefully that helped. All right, PLTR. This is big stock everywhere, right? I mean, everybody knows about PLTR now, right now. There's few submissions here. I think one person bought it here, added to it here, and then bought it here, and sold all of it here. I was watching this, obviously, it was on my list. I did trade it, and I traded it here, and I got stopped down on this day. I bought it on this day, and I got stopped out on this day, and the next morning it went ripping. So it happens to me too, right? But you gotta trade in real time, and I don't care what happens after. Right? This is how the stock was looking that day. Okay, so let me just remove this sell here from the submission. We'll talk about this the trade submission in a minute. Okay, this is how that stock was looking. This, what you know. So I didn't buy this. Let's just talk about why didn't I buy it here? Why didn't I buy it here? I know a lot of good traders bought it here and here. You would have made money. I mean, it went up from here all the way to here, 30%, right? It definitely would have made money. But I didn't buy it here because it's too early. So let me get the reply and let me put right here and see how the stock was looking. This is how the stock was looking. Okay. Yeah, this is power play, right? It went a little bit over 100. I mean, it went folds 140%, and it only pulled back 20%. So almost to the max. But this is too much selling. And I won't buy it, and I didn't. I've seen this way too many times. Can this go up? Yes, it can. But if I play this 100 times, I'm gonna end up losing money. It doesn't matter if this trade is successful. It's not about one trade. Every time you take a trade, ask yourself a question. If you play this 100 times, would you make money or you will end up losing money? In my book, I think you'll end up losing money. There's just a lot of selling here, and I needed to see more time. And besides, it's too early. 1, 2, 3, 4. 4 days down in a power play. That's too early. Power play minimum 10 days for it to set up. So it's too early. People are just rushed, right? AI. And yes, you could in mania days, you could just run, and that's okay. I don't want to be in it. I'll find another stock. Honestly, it's a better buy down here. Big run, not a lot of distribution, just do huge volume. Now, if this pullback happened on a very, very, very light volume here, it will be a different discussion. So there's no just black and white. It really depends on what happens to the volume and how the pullback happened. If this was just a gentle 4-day pullback, the 20 EMA with volume drying up, it's a totally different setup, right? And you can entertain buying that. So I didn't buy that, and that's okay. It went up, and then tried, 3-day. I still didn't like it. Volume drying up. I didn't do anything with this one, and then you guys know the rest of the story. Just went up, and then this was the reason why I bought it here. So let's go back, and it didn't work. So what was I waiting for, right? Why didn't I buy it here? Why didn't I buy it here? I was waiting for more time to pass. I was waiting for more shakeouts. I was waiting for more contractions, right? For more of this cycle. That's what tightens and give you the momentum that you need to start the next move. I was waiting for that, right? And here, I got this setup here is away from the selling, few weeks away from the selling, because I just a few minutes ago said, I want to see red bars drying, and then I want to see blue and green and volume drying up and no distribution, right? So I see that. Up down
Yeah.
volume 1.2 is still there. The shakeout. So there's your 1 and then wedging up, which is correct. And now it's sitting at the 21 EMA. So I am going to risk 4% to potentially my first sell make 17% to the previous high. And this potentially could have set up as a failed breakout reset, right? So attempt breakout, failed, now it's resetting, and it will go stronger when it does. And it did, but unfortunately, it did it one day after. I was expecting this bar here to happen here. I was expecting this to just go from here. And this is why my stop is very tight, because that's what I expect the stock to do. I don't want to give it 4 and 5 and 6 and 8, because I'm expecting the stock to open and just go. And it didn't, got me stopped out. It did exactly what I thought it should do the day after, and I missed it.
I think there's a couple of really things I want to just hit the nail on the head again, because you said a couple of things here that I just want to repeat in a different way. When you can tell the way TA is talking about this, he's always talking about what am I looking to see? And he knows what he wants. He wants contractions. He wants volatility to dry up. He wants the volume pattern to be proper. So he's got a checklist in his mind, and obviously he's a very experienced chart reader, and you will be too when you continue to look at these and you trade these and you're paying attention and doing post analysis. You'll be saying that doesn't look right, or that's not ready yet. So good traders, they tend to anticipate, and if it doesn't happen, they say, look, it's probably not going to work, and they'll probably get out quickly. So that's one thing. The second thing you mentioned that's really important is context of the setup. Whether you're coming out of a long consolidation, that's a different setup than a stock that maybe has already moved up 10, 20, 30%, and it's a pullback. So, or maybe there's a stock like ELF that's gone through a 1.5-year move and it's making a base, and you say, well, that's a different context because it's a very late stage obvious setup that the probabilities are probably going down. So context is really important when you're looking at the chart. So you want to look at a monthly, a weekly, a daily chart to get that context. And then, as you look at more charts, know what you're looking for. And that's why, if you trade 1 or 2 or 3 setups, you know it really, really well versus trying to be a master at 10 different setups. It's hard to keep track of it all.
Right. There's a question about, and I get that a lot, so let me answer it. Do you buy it when the candle opens or when it crosses, or how do you set up your, and the way I set this up, right? If I want to own the stock, I want to own the stock, right? I'm not going to play around. If I want to own it, I want to own it. I've already looked at this risk. I already like the setup. The night before or early in the morning before the market opens, I would place my stop limit order, okay? And then normally it's really easy to do here in TradingView, but essentially place your stop limit above the high of your trigger candle or your pivot, and then your stop, and then stop limit. So this stock opened up, and I think it rallied on that day and then pulled back and filled my order that's sitting in the market. And I'm working. I'm not watching PLTR every tick. I get notification on my phone that I own PLTR, and I'm like, oh, awesome. I'm in a stock that's potentially a growth explosion stock, and I was pretty excited to own it where I wanted to. And then same day before the close, I got my stop order. So it's not complicated. You want to own the stock, you like the setup, put your stop limit and let the trading gods take care of the rest. You can't outsmart the market. You can't overthink it. It's probabilities. It's all probabilities. You want to place your bets when you see good hands. Just place it. It doesn't matter if this trade is a loser. Put your trade on. You know, some folks says, well, I need to wait for confirmation for volume during intraday. Okay, great. You can sit beside the monitor and look at volume. And then if you see the volume, then place the order, do it. I can't do it that way. Okay. So stop limit. It's simple. Just give it 0.5% above the pivot. If you really want to own it, give it 1% above the pivot, depending on how much you're risking, but not more. Right? Don't just place a stop order open-ended with no limit to cover for gap ups if you're not looking at the stock. Okay. Kava. Let's take a look at Kava. New IPO. It wasn't clear really where that person bought it. They just mentioned the date. I kind of put it here. This had couple setups that took place. You know, IPOs don't require an uptrend. This had a small uptrend here. It's really hard. You know, I normally, like I said, I don't place trend lines, and there's really no trend line here. There's just 2 touches. You need 3 lines for a trend line. But this was, you know, I was joking sometimes on Twitter, and you call these tiger setup. But I mean, you had a small candle here. You had an inside day here. There's a trick that I use often. I mentioned it before. This is an inside day, right? And if you really want to own a stock and it's extremely set up, but it's just not quieting down enough for you to get on, this is a way to use to get on a low risk entry. So this is an inside day. And if you notice this day here, let me just blow this up a little bit. We took the low of that inside day, okay? But what happened, buyers stepped in and pushed it back up. Essentially what that's saying, there's no sellers under the low of this bar or this bar, okay? This is a good indication. And normally what you can do is you can place your buy above still this inside day is still a valid trigger. So what you can do is you can put your buy stop above this inside day. It's just a low risk entry into getting on a stock that you like with a solid plan. And now your stop would be really below the low of that candle, right? So you got your 5.5, 5.9% is your stop. I almost played it that way, but it just wasn't set up good enough for me, and I just let it be. But this is something I do often. This is still a valid trigger, and it's actually sometimes a stronger move because people who shorted this, traders who shorted this, they're gonna cover above this high. It's just classic swing trading tactics. And then you see how that pullback to this high held, right? And then held again here and then moved out. So you can tell that this pivot here is something that's being watched, whether by algos, AI, whatever it is, right? Traders. But I've seen that happens way too often in the market. So I use that as a tactic to get me into a low risk entry if I need the stock. This set up really well, obviously. You know, I see the inside day here. This is my sign of the inside day. It's just a dot telling me this is an inside day. Really clean pivot. That's why I like horizontal pivots versus vertical vertical trend lines versus horizontal. You could have bought this coming out. But obviously, just the market is not cooperating right now, and it failed. Okay.
You tell us what the red bars candles mean on your chart.
Oh yeah, I got this from Mark Caroso, the idea. This is mini coil. So I created indicator that flags when there are 2 candles at a minimum inside of 1 candle. So Matt calls this mini coil, and anything that has to do with volatility contraction, I adopt. And that's kind of his idea of a mini volatility contraction. So 2 candles at a minimum inside of a bar. So yeah, the red is obviously a candle, black candle, and then you'll see them green sometimes, which is a mini coil, and the candle is up. So I don't really trade them the way he does, but I like to see them on the chart. Like if I have a mini coil and then I have an inside day at the top of the mini coil, then I get really, really interested in that setup. This happened the other way around, right? You get your mini coil and you get like a small candle. It's kind of a short setup down to the side. I don't short often. All right, let's move on to PSTG. And let's take a look at the weekly PSTG. Oops, PSTG. And we're coming close here on time. I mean, it's okay. I mean, running up. I don't know if this is a power play. Let me go back here and measure quick. I'm not sure if it went 100%. Nope, 71%. So this is really extended stock, right? You gotta figure out what you're doing. If it's not 100%, 70%. It's no more power play. Power plays are not extended. Power plays have tons of momentum behind them. So when they go 100, 200%, they're not extended. A stock that goes 70% up from the bottom is extended because it's not a power play. Okay, so I would have not touched this stock. There's no setup here. There's just a right side ripping 70%, not a power play, and then you're just kind of playing this mini potentially pullback, but that's not a setup I would do. The execution is okay. So if this was a valid base, valid setup, the execution is fine, above the high, and then your stop, really the pivot low to get you out. But it's not a setup that I would play. This is just all over the map, ripping 70% up. Okay, so you guys can tell how when I look at the stock right away, you gotta know, is it a good setup or not? And you need to do whatever you need to do to get to that point. And it's by looking at good setups. I don't know where I heard it, but traders often ask, how does a bad setup look like? Well, don't worry about the bad setups. Just memorize how good setup look like. And then you'll automatically know what a bad setup look like. Okay. I don't want to spend more time on this. I think it's just no setup here to play. It's just an extended stock. Okay. Let's take a look at CVNA. Let's not even go to the weekly on this one. Downtrending 200. Okay, beating up stock. It's just, don't do that. I mean, you can. You can do whatever you want. You can trade whatever you want. But that's not what I trade. The buy here on gap up on a downtrending stock. Not what we do, right? This is not that. There's nothing here. Okay, so we'll make it very simple. Nothing here. Downtrending 200. Let it be. Doesn't matter how volume looks. Doesn't matter if institutions are accumulating down here. Let institutions accumulate. Let them show you their hand. And then when the stock grabs to momentum and start trending upwards is when you want to come and start figuring out how to get on along institutions. When
Will you call
momentum
up
kicks
the
in.
Market Smith chart of this one?
Yeah.
Okay, I think there's couple things to point out. When you're looking at,
Let's see, VNA.
you see this stock has had a, massive drop. And for those that didn't watch my general market update last week, I talked about the importance of 52-week new highs, which are good, but they're not as good as all-time highs. And this one is not as thick of overhead resistance, but if we call up, even call up Palantir on the weekly. If you go to Palantir, you'll see, yes, it's transitioned from 1 to stage 2, but you notice how it's gotten up in this 20 level. And if you look left, there is a thick load of people between $20 a share and $30 a share. Those people potentially become what we call overhead supply. There's sellers there that could at least short term maybe turn Palantir to base a bit. And so, all-time highs, when you call up, we'll call up NVIDIA or call up Celsius or call up VRT, all-time highs. Look at ELF. Every tick in ELF is an all-time high, and there's no sellers above you. Of course, there's going to be profit taking along the way, but there's not a lot of supply because everybody's making money generally on every long position's making money on every tick. So 52-week supply, our highs are okay, they're good. But when you look at these stocks that have fallen, 50, 70, 80%, you might get a play out of them. Again, I'm speaking more as a position trader, so they have some limitations. But as a swing trade, if you find the right setup, it can work fine.
Yeah, we still have a lot of trades. We only have 20 minutes. What I want to do, I promised folks on Twitter that I'm going to show a couple of good examples of pullback buys because there's a lot of questions on them. So I want to leave the last 10 minutes to that. But before that, there's a couple that I want to touch on quickly on the list, and maybe help people see a little bit more of that wedge in quickly before we move on. But let me touch on STNE. This is an example of things that you don't want to do. Double bottom here, right? But look at where the stock is, right? It's just at the right side, bottom right side of the chart, right? Should be here. We want to trade things that are up here, not down here, right? And so try to avoid things like this, unless you're a stage 1 trader transitioning into stage 2. So it doesn't matter how good this looks on the daily. This is not something I would trade. Bottom side of the chart, I won't touch it. EXPE was another example that I noticed. Cup with handle, right? This was submitted as a cup with handle. There's no uptrend for cup with handle, right? This is the uptrend, cup with handle up here. There's no uptrend. This is still stage 1. This is just shopping around, okay? That's why this cup with handle failed, because there is no cup with handle. There's no institutional support here. There's no consolidation. There's no rest. This is all still choppy stage 1. The reason why you don't want to deal with stage 1, because that's the characteristic of stage 1s. They're choppy, they're all over the place, right? So if you're playing breakout, if you're playing momentum, you don't want to be in stage 1. Okay. The other one that I wanted to touch on is RIVN. Obviously it was all over Twitter as well. It was being called power play. It's an IPO. Give it a little slack. It's a lot of sales, right? No money. I think it was high arrests when it was up here trading, but I never touched it. I watched it. I wanted it to set up. I wanted to trade it, but I didn't. Again, downtrending 200. And on power plays, sometimes you give them some leeway, but this is still a steep downtrending. Okay. and then wedgie. Okay, so you know, at some point you will start being able to see this stuff and avoid. I mean, person bought it here. The trade that was submitted. You know, that's again. Do this buy 100 times on stocks that does this. I think most likely you will lose on money. So this one, he made money, but that doesn't make it a good trade. Do this 100 times, you'll most certainly lose money. So now this is just gonna build a bigger base here, right? And what do I want to see here? I want to see this start flattening out and then start rounding this, right? With more stuff. I did trade. I'm gonna do one quickly that I trade, and it was on the list here, and it stopped me out as well. So I'm RVL and AVGO. Show you why I chose to trade RVL versus AVGO. RVL. They're both in the same semiconductor. So this is RVL, and this is AVRGO. AVGO. Okay. This is looks like climatic run, and then wedging up as it's trying to go back to its previous high. No coincidence that it stopped at previous high and sold off. When you look how this is looking, right? Just wedging up versus, and this is where that person bought it right here, right? This was a traded submission. I see what they're doing. Tight candle, buy it, get out. If it doesn't work, that's fine. But again, ask yourself this question. If you didn't buy it here, let me just go back. If you didn't buy this pullback, you didn't buy this pullback, you didn't buy this pullback, is this a better buy? I don't know. Right? So I'm RVL. See the difference between MRVL and AVGO, right? So I bought this here, it's inside day, and this is your contraction away from the red, and you got your first, and then as you go up to the high, and then your second, and then a little pause, and then I thought this is gonna go that, and it didn't. And yes, my stop was extremely tight, right? So my stop, I believe it was below this low. I gave it, yeah, I entered here on the green, and then I was stopped out for 2%. And I know a lot of you are thinking, it's crazy, 2% is crazy. It is because I'm expecting it to go, right? If you buy it here, and then you give the stock 2%, yeah, you're gonna be ripped apart. But I am buying from a place where I want the stock to just go. So let's take a look at a couple of pullback buys to show you how you can get into. And pullback buys are harder than cheat, when low cheat, handle. You know, they have a more clear pivot, right? So you can see right here. You can see the pivot right here. You can see that resistance. Pullback buys are hard. They're hard to understand. They're hard to interpret very clearly, and you need a lot more practice and experience to identify them live. They're easy after the fact, but they're not easy when the chart is unfolding. So IBKR is one that I traded 3 times, pullback buys. And let's go through them quickly and walk you through what was I seeing to help you try to maybe take some notes of what a good pullback buy look like. Okay, so here's your uptrend, early turn, and then here's your base, right? So this could potentially be a continuation head and shoulder, right? Or it could be a cup with handle. Okay, so base is building, great earning. Didn't buy it on earning. This is not set up yet, right? So you got maybe your first and then just up, right? So this is potentially your cup. I like buying cups right away going into new highs, especially not in not so good environment. This is the earning in the pullback, right? Pulling back to the 21 EMA, inside day, volume drying, and this was my entry, right here above the high. Okay, so this is my first pullback buy setup on this stock, and I sold, I think, here. And then the financial crisis happened, right? Just banks blowing up, and bankrupt, and whatever. So now you get all this selling. Okay, so off my list, and then my weekly trading, I start showing back up, right? Because now it's stabilized and it's starting to round up the base, right? This was a strong stock here, but financial issues took it down. Fundamentally, the stock is really strong. So it starts rounding up the base, and right here is when I start getting interested again. Okay, so you get your first, and then you got your second, and then you got just more tightening, right? Just more tightening. And this is where I bought it right here coming out. So this was my second buy on a pullback right here. And I think I sold it here. Just was getting close to earning. I'm just not holding through earning. So that's my second buy. And then I just waited for earning to get out of the way. So with earning, we had huge volume, and I normally avoid red bars and just let them give me more time. But this caught my attention. And you remember when I said I don't kind of buy them like Mark Grosso does. This is your mini coil, 3 bars inside of 1 bar. The reason why I was interested in this, 2 things. Buying it over this high gives you 1.3%, 1.4% stop. Okay. The earning reaction was bad, big volume. What happened next day? We opened at the low of the candle, bounced off of the 10-week MA, and nothing but buying the entire day. Right? And then after that, 3 days, extremely slight pullback with narrow range candles. What is that telling you, right? Just overreaction to earning. Institutions figured out, okay, nope, it's not as bad. Let's come back in and buy the stock. And what was it going to be to find out if I'm right or wrong? 1.4% to make 10%. I think I sold it here actually. I have a dotted line here. This is previous resistance from the past, so I sold it like at the high of this day. Then it pulled back. I'm like, oh, I'm a genius. And then obviously it went back up. But what I have this fib retracement here that I created. It essentially just allows me to put my reward to risk. So I bought the stock. Here's my stop. Here's where I bought it. I'm going to extend those so you guys can see it. So I bought it here at this line. This is my stop. This is your 1R, 2R, 3R, 4R, 5R, 6R. So I did this quick trade for 4R. So that's how I go into these low risk entries. And they are all pullback entries, right? So uptrend, pullback, uptrend. And I'm buying here when they're turning back up, right? Same thing on this one. Let's do that again. Uptrend, pullback, uptrend. Right. CCCJ is another one that I traded very, very, very similarly. I traded it here actually, stopped me out, almost break even. And then I was looking at it here. It's a little bit higher. I did not trade it. I traded this pullback right here. So this pullback right here is what I bought. Okay, so uptrend, pullback, uptrend, and then you buy it here. Okay, they're not as easy to really identify. FND is one that I really missed I traded this stock here. Again, clear pivot. That's why I said the pivots are a little easier to trade. And this is a good example of early, right? So here's, and I know we're hitting time here. Here's your uptrend, and then I bought it here. So if you've heard what I said before, you're gonna maybe wonder, well, why is this not early? Okay, so here's the uptrend, here's the pullback. There's really not enough cycles, right? There's just not even one, right? It's potentially just rounding up the left side. Why was I interested in this? There's not a lot of red. Your OBV is making new high. There's tons of buy-in at the 50, right? If this was all red, I would not touch this one, okay? So context of where the setup is with the volume is a big tell as you try to navigate your setups. Not that this worked, but it's why I bought it, right? So I got stopped out, maybe a little loss here after going, but this is the pullback buy here that I really wanted to get it in on, and I didn't. I don't remember why I didn't buy it, but now you've got this bigger base, right? You got your and just bigger base here, and you got your handle, right? So this is I don't think it's an inside day. Oh, yeah, it is an inside day. Yep, it's an inside day. And this would have been a great pullback buy. So it's in the handle, and then you also have your uptrend pullback, and then potentially continuation. And then you have an add-on buy that actually just developed after. So you buy it here over the high, and then up, pulled back, then you have another chance of a pullback buy. So now you have a bigger up, pullback, and up, then you can add to your position on this setup right here. Okay. I know there's not a lot of pullback tutorials out there around this stuff, but it's extremely important to know and see where these pullbacks are, right? They're not up extended. They're not after the stock moved up 20, 30, 50%. They're either right above the base or inside the base. And that's where 90% of my buys are, unless it's a power play, right? So FND is inside the base, on top of the base. And then you look at IBKR, inside the base, inside the base, inside the base, right? And they're hard to find. Everybody can see a stock pull into the 21 EMA, right? After it breaks out, everybody. And there's nothing wrong with that. You can play that. If that's what you want to play, if that's style, if that's your way of trading, there's nothing wrong with that. Strong stocks that broke out, pulled the 21 EMA, and then bounce and move. But you got to figure out where you want to live and how you want to trade, what you want to do. Okay, we've got 3 more minutes. There's a lot to cover here, and apologize for not getting to all the trades that we have, but I think we've covered a lot of concepts here.
Yeah, we've covered a lot. We've covered a lot of ground, a lot of good sound concepts, and certainly, things to look for. We've clarified a few things for people. Some people were asking about your OBV indicator. I don't know if that's available or if that's private or not.
Yeah, the custom one is private. I haven't released it yet, but OBV is available on any platform. And really the only 2 things that I did to it is just did the 3-month highs. So high before price and high with price. And then the color is really just up down volume baked into this. So essentially, if it's I don't know, brown or whatever, it's intense buying pressure. If it's green, strong, moderate, and then buying pressure. So blue and above, it just tells me that up down volume ratio is above 1. And then gray and yellow and red just tells me up down volume is below 1. So it's just a little bit of customization. I don't like a lot of indicators, so I didn't want to put up down volume on the chart, so I baked the colors in there. This is available. The 50 MA turns red and green is available. The 200 MA is available. These are really my custom stuff. There's just no materials out there to explain how they work and how I use them. So that's why they have not been released publicly yet.
Excellent stuff. Excellent stuff. I'm glad that people, a lot of great positive feedback in the chat. Many of you, will put this video up on the Zoom once it gets, downloaded. We'll get it up there tomorrow. Everybody who attended either live or just registered, you'll get an email with the link to the video. This is interesting, idea that TA suggested. So I think, people seem to have gotten some good stuff out of it. And hopefully if one of your charts was reviewed, you learned some stuff there too. But it was a lot of fun. I think it was like a master class and some excellent chart reading. And I think some sound principles about context and, what to look for and sprinkled in there is risk management and all of it. So I think it's just really, really good. Thank you so much, TA. And I don't know if you want to say anything as we try to wrap up here.
No, thanks for inviting me over. I think this is fun. I mean, this is all started with just a suggestion from folks on Twitter on presenting this. I wanted to take the chance to review trades and how to identify bases and what to look for. I think my assessment is that that's what a lot of people struggle with, is what looks good. And how do I know this is a good setup versus not? And it's really, you gotta start building your model books. You gotta start building and looking at others that have built model books and try to just practice that. A lot of times when I'm struggling with the market, which trust me, still do, I go back and look at my model books, and I just kind of reinforce the idea that, hey, look, it's the market. I know I didn't talk about the market at all today and how I navigate that piece, but get better at identifying good setups, and I think your trading would improve.
Yeah, I think it's all about, I think somebody mentioned about what's a bad setup, and you should invest your time into burn into your brain what the good setups look like. Spend all of your time, basically mentally burning those images and model book setups into your brain, and in time, stuff will start to connect, and you'll start to see these things as you look at charts very quick, and you'll either say, that's not it, I'm moving on to the next chart, or you'll say this might be it, and then you put it in a list that you're going to look deeper at, in your second round of your watch list. But it just takes time to kind of train your eye, really, and just takes time looking at literally thousands of charts, and that's where you should spend your time. Don't worry about looking at bad setups.
Yep, I agree. That was awesome. Thank you, guys.
Thanks, everybody. We'll get the recording up tomorrow night. And we really appreciate everybody spending some time with us. It was great.
Thanks, John. Bye, guys.
All right. Good night, everyone.